if you're simply willing to just actually put in some work, maybe just even watch my videos, maybe join our group, hang out a couple out, just 1 hour a day, maybe 30 minutes a day, come to the group and take a look at what we're at. Look at our big news that's going on, maybe some plays we're looking at least just 30 minutes a day. I really think even that you could be totally successful in this market. As long as you do some simple things. Number one is just go with the flow. It's as simple as a river, right? You want to try to swim up this thing, or you would rather swim down this? It's scary either way. But I think it'd be a lot easier just getting a kayak and go down it than try to kayak up that thing. Why would you try to fight it? So many people get scared of shorting the market, shorting stocks. Shorting actually is scary, but there's other ways to play it. We've been showing you these for years now. What do we have, like 3 years now? We're almost at our 600th video. Can you believe it? Thanks for all who have been here since day one, stage one, video one. Absolutely incredible. I never thought it would turn into this. I thought I might do maybe 10 to 20 videos and it'd be whatever and I'd move on to something else. But apparently people getting helped, and I'm happy about that because selfishly it makes me feel way better about myself too. Okay? When I hear that people are succeeding from plans that we put together or some of the effort as a group we've put together to come up with ideas, that's an amazing feeling knowing that. And I want to create more of that. Can you help me? Can you help me help other people? We're going to take a look at full macro today because it matters, right? We don't try to get into, political sides or anything like that here, but we try to at least give you the meat of information from just a sliver of what I take in a day. I'm looking at stocks and stuff 10 to 20 hours a day, all day long. If you don't believe me, ask anybody in the group. Ask anyone in the group. So I try to condense this video down as short as possible. Let's dive right in. First of all, this is all the macro you need to see right here. If you want to just turn the video off after maybe 30 seconds from now, you should fully understand what to do. If you watched last video, okay, did you watch the last video? Did you make it all the way through? Just do it. Amazon is firing people. 20, 30, 100, 1,000, 100,000 people. And that was just in June. They're projected to keep going down. Their words, not mine. Well, we've been saying this for a long time, years, but it's finally coming to fruition. The snowball is finally compounding and getting bigger to where people are finally starting to pay attention, right? Not only Amazon. If Amazon has to fire 100,000 people, that tells you all you need to know. How about Netflix? How is Netflix losing money? How are they firing people? Seems like they'd be bold. What about Google? Google, in an industry-wide adjustment to reducing, that's all you need to know right there. If you want to learn more, get a little bit more precise, grab some popcorn, maybe something to eat, something to drink, whatever you got to do, get comfortable. This breaks my heart. This totally breaks my heart here. Did you know that good old Mississippi here in the United States does not have drinking water? So far, they're saying indefinitely, which means they ain't getting water anytime soon. Detroit still really has some problems in a lot of areas too that everyone claims is going to fix and they never do. It ain't going to happen. Now Mississippi. We already got some hurricanes coming in too. That's pathetic, y'all. Think macro. Why? If everything was true and it was always about making societies better, and we have the money we do and we spend it the way we do, why wouldn't we do something like fix the water system? Just think about that. Just zoom out for a second. Something as simple as that in the United States of America. If you told anyone in any other country there were cities in America that had serious water problems that can't even drink the tap water, they might not even believe you. Everyone thinks that America is just Los Angeles. Something thereof. Here's another macro thing that always correlates with what? Market. Market what? Downturns. Talked about how before Asia, China specifically, but let's just call it Asia, Pan-Asia, whatever. They kind of front run everything. I'm not saying they're in charge of everything or they're the daddy, but the way the World Trade Center and system is set up, clutching on United States dollar. All small things, big things usually go to China, go through China. They're usually leading indicator of market recessions and when markets are doing good. Asia currencies now at CVOD lows, March 2020 lows, and the Great Financial Crisis lows. Can I say that on YouTube? To the GFC, Great Financial? Hope I can. Asia Dollar Index, look at this. This is per Bloomberg, JP Morgan. War, oil shock is what they're blaming on now, but dude, look how low it is. Lower than the Great Financial Crisis, dude. And remember, at this point in the Great Financial Crisis, people were already like severely getting stuff repoed and their houses, losing jobs, losing girlfriends and boyfriends, all that. We're not to the .com level yet, but let this be a leading indicator that should magnetize and pull SPY down with it. What direction is SPY going to go? That's what we try to figure out all day long. Because basically everything kind of does correlate with SPY still. It really does. If we can figure out SPY, kind of figure out everything else. Update on the Federal Reserve. Remember, they're doing quantitative tightening and they've only done still less than 2% of their total money, which is very small. But last week, what'd they do? Upped the Treasury balance, removed money out of the depository institution money. I try to keep this channel as simple as possible, but essentially we did get some tightening kind of last week again. Okay? So we're still talking pennies though on the dollar. They still, napkin math, they probably still got like 70% more liquidity they need to take out of the market just this year alone. Because remember, they want to do 400 to 500 billion, I think. Yeah, just this year, and they've only done like a quarter of that. Long ways to go. Still no real big spikes. See how they are tapering this down for a soft landing? This is since they started it. Actually, this is only since June here, but you can see they'll go down a little bit, and then they actually have been doing quantitative easing, which no one's telling you. They're actually going back and like buying mortgage-backed securities, which made the mortgage rates go down. Remember? Gave some more false hope. Ripped off a bunch more people in the housing market. People are literally have lost their mind and still think it's a good time to buy right now for the housing market. I digress, man. I don't know. But look, we did get a shock down, which means next week we're probably going to get... What does that mean? They're probably going to buy the dip maybe this coming week. That's usually what happens, right? Down a week, up a week, down a week. But more, when they go down, they're selling a lot more than up, right? Pay attention to these things. This is why many, including myself, have said, what is a recession? What does a bad looking economy look like? This tells you everything you know right here. What is going on here? This is balance sheets going off for the Fed, okay? So basically, they've been doing quantitative easing since when? 2008. So if a lot of the liquidity in all the markets and money flow and exchange in all markets total has been because of the money provided, loaned, and bought and traded through the Federal Reserve to the tune of this ridiculous graph that got us over $8 trillion since then, how can you really measure an economy? This is a completely fake economy since 2008. Everything switched then. Got a question in the Discord. Someone asked, hey, I've been looking at reverse repos. Have you heard of those? That's diving into some macro weird stuff for, money exchange for banks and the Fed. Basically, every time money's moved around, the Fed gets their cut. So technically, The Fed could keep printing money forever because every time money is used or abused or transferred or bought or securities are bought, the Fed is right there in the middle. That's why, like, technically they could just actually increase the tax, or maybe decrease the floor, the value, the percent that they're giving on what held cash, stuff like that. Did you know banks, big banks, have to give them cash, part of their cash to hold? Did you know that? Maybe not credit unions, but the big banks. Why do you think? They got to get their cut, homies. He said, I've been looking at reverse repos. Overnight reverse repos have increased. However, after a few hours of researching, I still don't know what to make of it, good or bad. Long story short on those, basically banks, like I was saying, like JP Morgan, let's say. JP Morgan and Goldman Sachs or whatever. They want to exchange, they need liquidity. Why do you need liquidity? So you could have backing for like a big loan you're going to give for whatever, some big building or maybe an IPO. I don't know, right? When they need liquidity, they can knock on Goldman Sachs and say, yo, can I get some liquidity, cash? And I'll give you these certificate bond thingies in exchange. I will give you 1% for doing that swap for me. Okay, that's all. Let's kind of go. It's just swapping money. It's actually buying a bond. Sometimes they're buying. Sometimes they're actually just swapping or trading or holding. There's so many ways they do it. That's all that is. But regardless, remember I said that the Fed sets rates on that market, so you can actually park cash into the reverse repo market. This isn't like repossession of like a boat or something like that. Don't think of that. It's just repositioning of cash to paper bondy stuff. Okay. Technically, when people go to repos, reverse repos, they're scared. So instead of having money, cash, and putting it into SPY, like most people do, right? You just take your money, put it in SPY, forget about it. Or even trusting a fund manager, what they do is they actually just put it into the repos because it's safe money backed by the good old daddy, the Federal Reserve. Right. Last time I looked into it was like 0.5% year over year they're paying on it, which is terrible because inflation's way over 8%. You know, we've talked about that for years. So technically you're still losing money, but it's the safest place to hold cash. Some people think I'd rather buy anything, I think. I'd rather buy a classic car or precious metal, anything other than maybe some land and just sit on it versus 0.5% year over year and trust the Federal Reserve. Ain't gonna happen. But anyways, there's like these fund things, let's call them like ETFs, okay? And they, like I said, they're the safest because they're backed by the Fed and all that. You're guaranteed 0.5% year over year, so you get a better return on investment, best risk to reward for big bank and big money so far. This isn't getting into, stable coins for crypto where, you still got a lot more risk, but you have a lot more upside because they actually even pay you to hold those. But for instance, like these are called money market funds. So like you can get an ETF, let's call it an ETF, or AKA a money market fund. Pretend like a money market fund is a super boomer ETF. The easiest way to say it. Why? Because most of the money usually held in these, this one's Fidelity, I just brought it up. I haven't looked at these in forever, but like Fidelity's got like 3 of them. They weight them a little bit differently, but basically you're barely getting any percent, but your money's safe. I'd rather just short SPY and do like a spread or something. You can even do that. There's a lot more ways, I think, if you want to move your money. But regardless, they do stuff like this where Fidelity has these and you just buy, you buy into it, okay? The money market fund. Like all big banks will have these, money market fund, and most of it will be in the reverse repos. You're going to get that small percent. Long story short, when people go into these, They are scared. They pull their money out of everything. They don't know what to do. House prices are going down. Commodities are going down. What's going up? Agriculture is going up. That's weird. But just stay on track to answer the question. People are scared. People with big money are scared. They're confused. They don't know what to do with their money. They put it into reverse repo stuff through ETFs, let's call them, called money market funds. That's the small gist of it. Okay? People are scared. They go to that, like super scared stuff. There's usually like T-bills and stuff like that kind of mixed in there, but usually you get better returns actually on those reverse repos. Who's the real daddy of the market? Whose is the real daddy? Was it Asia? We were talking about that. Kind of. I mean, that's a leading indicator, but I don't think they're the daddy. Who's the real daddy? Could it be what are we looking at here? Forward PE spread. S&P 500 energy versus the market. So S&P versus energy is what we have here. As you can see, this blue line, let's just call this the energy. So this is more the energy versus the SPY, but it's front running always the SPY. Remember what I said earlier? This is all about figuring out the SPY. So we've talked about this too, how commodities will tank oil right before a recession is admitted by whoever, the Fed and who's ever, the president come out. We are in a recession. Okay, we're at the soft landings on some. Once they finally admit it, commodities have already tanked. But check it out. There's always, not always, but look at the chart from the 2000s. There's usually always a huge rip, bull run on commodities, energy stuff. Let's call it energy. Okay. Huge run, blow off top. Look what happened here. Look what happened here. We had that blow off top. 2008. See what I'm saying? So whenever you see this thing spiking out of control, getting close to like 10 versus the SPY, outperforming the SPY, it's time to short it. And it's getting close to shorting the SPY. Because remember, this is leading it. All right? Even in, for instance, like SPY. SPY did not get its peak in like 07 or 08. It was 09. I think it was like March 09 was SPY's final bottom. But you would have already known that if you were watching this. Because once it finally caught up and it had this spike, it's time to get in. Okay? So commodities, energy, they're leading indicators. Agriculture, kicking butt. DXY, the US dollar, it's in that squeeze we keep talking about. The world trades reserves in the US dollar still. Until that changes, it is what it is. Stuff's kind of getting cheap though. Iron is cheap. Copper is getting cheap. Gold, I wanted 1,000 an ounce. Brent oil, looking cheaper, at least it's going down. But what's going to happen? Are we ever going to have a squeeze effect? Look how low this is. Maybe once SPY finally gets magnetized down and catches up with this, and this starts reversing, what's going to happen? The stuff down here that's completely beat up that nobody wants right now, iron, copper, it's going to go back up, you think? Let's take a look at SPY and the RSI. Another pump is coming, and I'm going to short it all the way down. When this next pump is coming, I don't know. I think we're probably going to have a red Monday, Tuesday, because that's United States won't be open until Tuesday. Because usually when you got a red Friday, most of the time you have a red Monday. Did you know that? At least opens, so you can play that. You could probably just play that. You could literally probably just play that. If Friday's red, buy into it. If it closes red, buy into it. Inverse bears, buy the bears or whatever, and just sell it open on Monday, bro. Why not? I think we have that. We'll get into more reasons why, but I still think we're here somewhere. I still think we're gonna have a pop up-ish, closer to, like 4,100 or, just below that. And me and a lot of the homies agree that that's going to be time to get into some shorts. We actually have a VWAP at like 4120 or 410 on SPY. This is the SPX or ES, all the same thing. This is the future side of it. But, there's just probably going to be another spike. And here's my glory box here when I want to start like dripping in to stuff to grandpa to long. Under like 3640 down to 3,000. I'm gonna start accumulating stuff and holding it, going long a little bit. But I still think we're far away, dude. This rally still needs to go down, but there's always another rally up. One good way to tell that, and I don't really talk about indicators, but if you're gonna add one to like y'all see my video on how to use TradingView. If you haven't watched it, but add this one, okay? This is called the RSI. This is like the tried and true bread and butter. It's as simple as this. When the RSI gets below 30 here, or close to it, it's going down, that usually means it's probably a good time to start longing some stuff. On the contrary, when it gets above 70 here, above the purple, it's probably time to short some stuff. Basically, this is the SPY, maybe a leading indicator of the SPY. You can kind of use it as that to double check yourself, but before you wreck yourself. Now, this can stay way down here below 30 for a long time. So like all next week could be red. I don't know. But regardless, I'm still in a lot of bears. So I'm going to be selling, dripping. I drip in and I drip out. Selling my bears on the way down. And then I'm going to wait for that pop, right? And then I'm going to start getting into the bear ETFs again. There's no way someone can convince me right now that we have hit the bottom for SPY, dude. I'm just not convinced. There is a way. Something magical could happen, but I'm 95% sure we're still going to have a lot of downside. Mr. Bit Doctor talked about him, like his YouTube, or go check him out. Watch his video. There's a RoboCop dude. This is what he's kind of thinking. He's thinking, yeah, we're going to have basically a pop into next week at some point. It could be Monday. There's usually, again, there's the first 30 minutes. I let that adjust. I either buy and sell in between that, and then it's going to usually revert. But we'll just have to play it by ear. But he's thinking the same thing. He's using some fibs here, but he's also just using, you can pull these, like these rectangles. He shows them in his last video. Go watch how he does it. But basically you can put these as like support resistance lines of times to start dripping into like shorts or bear ETFs, right? So he's kind of thinking the same thing. He's going to start buying some here. And if it goes past that, it could go up here. These are Elliott stuff. Go watch this video if you want more information and his thesis on that. Kind of showing it here. We had this, these lines in back here, and it's pretty much playing it out. Not to the exact second, but it's looking darn close here. When you see these candles like this that look like Thor put his weapon of choice upside down, isn't it supposed to be led to the floor? Usually means it's going to go bull. So like here, perfect example, Thor, his hammer upside down, then it went up. This is only on the 4 hour though. If you see this on the daily time frame, it's even more convincing. It doesn't look like that on the daily, but I just wanted to point that out because I saw it. Again, macro, we've got lots of confluence and stuff, going way below, going to at least like the 380, 3,833, something like that. Mr. Scott Rubner, strategist, I think he's from B of A or Goldman or something. He said we estimate 9.2 billion worth of selling each day over the next 5 days. He agrees with what I'm thinking, that we're going to get some red first. They're going to unload, dude. They're just going to unload. Powell is speaking, though, at the Cato Institute on Thursday. So what I'm guessing is, we're going to have red till Powell on Thursday, and if we're still bleeding into it, I'm probably going to take a long and go nuts. Don't follow that advice though. That's very sketchy. and always use a stop if you do. But chances are he's not going to say anything that's going to blow anyone's mind here. But that's just how the market is going to react to it. Do the opposite of what it's doing. Go with the flow. Macro. I'm macro bear, but I'll catch along if we're dying into that, right? So we got toots that are got to get rid of a lot of money. It's easier to short right now and unload stuff they have than it is to buy because there's low liquidity in the market. There's not enough buyers. There's just not enough buyers out there. So instead of artificially inflating stuff to get in and get out and blah, 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 they're just got to sell stuff. Okay? They're net short at least for the next week. But I think we're going to get that pop. In fact, I think the 13th, 13th, we got a new moon coming on. It's usually like a bull moon. Let me know. Note the figures are globally and SPX flow in brackets. Last 20 years of the Spire or the SPY. Check this out. So again, this is the last 20 years in SPY for seasonality for September. Exactly coincides. Got about a red week, red till pal, and then boom up for what? For us to get into bears again, right? I'm going to get into bears here and then sell my what? Bulls that I bought here into pal. Okay? I didn't look at any of these until the thesis was already made, just from charting, by the way. This is all just putting sugar coating on my creme brulee. Okay. And then what happens after that, though? Death and destruction, something like that, into October. And we'll go from there. S&P, now remember, this is from, was this all-time, I think? Yeah. Okay. Seasonality, same thing. Showing this up here, it's going to go back down, but usually there is a spike seasonality of all time. Or this is 20 years. No, that's all time. All time. 20 year. Oh, no, it is 20 year. Okay? 20 years, long time. I got that backwards. But it's saying that bad into October, right? But we're going to play these flows regardless. And this is just average. We're only hitting these recession things like every, 11, 12, 13 years, something like that. So that's going to also have a lot more downward pressure to this. Just keep that in mind. Eloquent, Elo, the man, dude, the Elliott wave guy we talked about. He found this out on crypto, which is pretty crazy. This stuff just, it works. Like, numbers just come together sometimes. But he found out that 77 days between tops and bottoms for the S&P 500 right now. 63 days between the bottoms and the tops. If this pattern holds true, the bottom end of October is October 31st. So what is he saying? We've got an extreme pattern for basically the big bull rips and the big bear drips. The days are exactly right on point. Look at this. He even put a Christmas pattern on the chart for you. It even hit some fibs, and we're in this beautiful pitchfork thing going all the way down. We hit the top of it. Guess what? We're probably going to hit the bottom of it, or at least go down. Go down, go down, go down. That's BTC. But, again, everything kind of looks the same. SPY, NASDAQ, it's all about the same. He is seeing another spike. Could be right away on Bitcoin. I think it will try to do some decoupling stuff at some point, but what macro thing has to happen for that to happen anytime soon? I just don't see it. So I think it's still just going to kind of try to stay with SPY for the most part. So same thing. We're going to get some dips in here. If we get a big spike, though, maybe all the way up to what? Is that 30,000? I don't know. You're going to have to watch his last video. Short it. It's going to be shorting. I do have some spot, I'm grandpaing some Bitcoin. I don't buy like Bitcoin, but I buy like alts, and I'll be removing some if we get close to 30 because it'll probably 2x from here. He has his last video too, showing that, like, dude, Like all alt charts look exactly the same, and they're all basically doing this. This is not good. He's calling it, this could be redistribution here. Where they're hitting like this one 4 times ADA Cardano. Dude, that doesn't look healthy at all, man. It's supposed to reject, and then enough volume will finally, buyers will show up to make this thing finally rip, but it hasn't been, dude. If the buyers never show up, eventually the sellers are going to give up too. What do you think? Same thing. Charts all look the same. Okay. Here's another one from him, BTC. Now we could, if this doesn't have a big rally up, he's thinking that we could just totally just fail on crypto. And I kind of see that too. Like, it's just, what's holding it up right now? There's still no like big huge use cases that are going to be put in for maybe another 6 months at least, something like that. But what would it take to prop up Bitcoin? Like, Elon can only tweet so much. I don't know, but we're kind of at that crossroads where it's like, it's either going to do this green thing here or we're going to do the red one. Go watch his videos for more information on that. Take a look at housing. Are you guys over housing yet? Do you get it yet? But have you taken a position? In it yet? Month over month change in national rent index from 2018. We're saying, did the video right here last year. Okay. I said, this is the FOMO of FOMO for housing market. Yep. Look how insane this is. We still had the beginning of this year. It still got the crazy FOMO, but look at we're like at half what it was last year so far. Just wait. Someone in our group, this was interesting. I love this boots on the ground, hitting the street stuff. He said, I do real estate photography. And I went from taking pictures 5 to 7 homes per day. That's a lot of work. Good for you. To 3 a week now. I think he's outside of Chicago, the burbs or something. I don't know, Chicago somewhere. That's quite the decrease. How does that not make you think? Look at this. Still no one believes me. Asking rents have reversed in dramatic fashion. Apartment listings, national rent index, median asking rents. Massive peak. Almost the exact time I released that last video on housing. Your little hood might be doing decent and holding a little bit, but don't think the others aren't going to drag that thing. Capitulate. Look in March here. People freaked out. Will we get there? Will we go lower? The median monthly mortgage payment was almost 1.5 times as much as the median monthly asking rent in the second quarter. That should blow your mind. The median monthly mortgage payment was almost 1.5 times as much as the median monthly asking rent in the second quarter. That means investors, non-investors that just have another house, vacation house, whatever, that are doing VRBO with or whatever, they're losing their booty. They're paying their mortgage. They ain't doing it right. They bought too high. I don't care if you got 3%. You can't deny these numbers, man. Most people are going to lose it. If most people are going to lose it, it's going to take your house down too. I'm telling you this now. I told you this last year. The largest differential with records going back to 2009. And that was I think that was like the peak of the great financial crisis housing thing. Dude. And we still haven't admitted any, well, we've admitted it, but the big boys still haven't even admitted. How about this? Many Polish folks that bought 6 flats in the 90s and 2000s are selling. This is coming out of Chicago again, taking their profit and moving back to Poland. So we got some international folk that are packing it up. It's like, thank you, America. We'll be back next time when the dip is in. Smarty pants. Good for them. You should do it too. Old people are cashing out while the market is still warm. Yep, the smart ones. They say they're tired and ready to move on and enjoy their retirement. Good for them. Hopefully they're renting. This is pretty crazy here. So, can you remember why they did this in 2006 and 2008? This is some macro stuff that you really need to think about if it makes no sense to you at first. Bank of America just came out and said they're coming out with what's called America's Community Affordable Loan Solutions, which is aimed to make sustained home ownership attainable for more Black and Hispanic families, offering zero down payment, zero closing cost mortgages. Ask yourself, in any market, let's not say we're even in this bad market. In any market, why would they be doing that? I'll let you answer that question yourself. But in a bad market, think of what that's going to do. They're coming as a savior, but are they a wolf in sheep's clothing? Also, no mortgage insurance even without down payments of usual 20%. If they have no mortgage insurance, what happens? If they lose their job and then they can't make the payments on the house anymore. I know what that means. They'll be able to qualify for a more expensive house too, because they run the debt to income when you get a mortgage. And when you don't put 20% down, you don't, through this, you don't have to put 20% down, but you don't have to pay the insurance now if you're Black or Hispanic. So that means they're going to overqualify them too. People said that this wasn't going to happen. This is exactly what they did in 2006 through 2008. It's exactly what they did. It was the same thing. I think it was only black people that they did that with, though. I don't think they did it to Hispanic then. And it was through Clinton. Y'all remember that far back? It's the exact same page out of that book, dude. And guess who gets screwed over the worst? Those that are taking advantage of these things that the sheep are coming and showing them. They're wolves, y'all. This is disgusting, man. As debt to income, talk about that, and they doing it already at an overpriced. Oh yeah, and they're only going to do it in, I'm going to call super bubble markets, such as Charlotte, North Carolina, Dallas, Detroit, Los Angeles, and Miami. Man, I hope no one's trying to take advantage of that or let them take advantage of you for that. Did you know that more job openings than expected equals higher salaries for workers, which equals higher inflation, equals Fed raises rates higher, equals recession? People all claim they want the minimum wage to skyrocket. In a perfect world, in utopia, maybe. But remember, the closest thing we had to that was Libya. And what happened? What happened to Libya? You got paid to get pregnant. You got paid to get to school. You got paid to graduate. You got paid to get married. What happened to Libya? That's my question. Where do you think we're going to go? Do you think we're going to, how are you not macro short right now? Don't FOMO. Don't buy stuff that is like, the next day closing. If you're going to do options, just don't do it. If you want to know which ones to buy, watch my last video I was talking about. It's like the last maybe 20 minutes of it. I go over the exact plays and why and when to play them and when not to play them. Check it out. If you want to hang out with us and go over plays all the time and just move stuff around with us, join our group. Links down in the description. You got to join the Patreon and we'll get you in the Discord and we'll all make some money together. Thanks for watching the video, folks. Have a great day.